How a 50-year mortgage inflates home prices. The moment a 50-year mortgage enters the market, everything changes. It does not announce itself with drama or urgency. It does not come with alarms or warnings. It slips quietly into the financial system, offering something simple and appealing: a smaller monthly payment. At first glance, it feels like a pressure valve finally turning down. But beneath the surface, it triggers a chain reaction that reshapes the entire housing market almost overnight. To understand this reaction, imagine a home listed for $400,000. With a typical 30-year mortgage at current interest rates, the monthly payment sits around $2,200. For some buyers, that number is out of reach. They stay on the sidelines. They wait. They hope rates fall. They hope prices fall. And in the meantime, demand stays limited because affordability stays limited. Now introduce the 50-year mortgage. Suddenly that same home costs around $1,800 per month. Buyers who were previously excluded now see a path forward. They return to the market. They show up to open houses again. And so do thousands of others who were waiting for any kind of relief. Overnight, more people can afford the same home, not because the price dropped, but because the loan stretched further into the future. This creates a surge in demand. But demand alone doesn't raise prices. What raises prices is what happens next. With more buyers chasing the same limited number of homes, competition intensifies. Offers climb. Bidding wars restart. And sellers quickly learn the simple truth: if a buyer can pay $1,800 a month instead of $2,200, they can also pay more for the house itself. This is how markets work. They adjust to the maximum amount buyers can tolerate. If buyers can suddenly afford a 10% lower payment, prices rise by roughly the same percentage. The temporary relief disappears. And soon the home listed at $400,000 creeps toward $440,000. Matching the new demand created by the longer loan. This pattern has happened before. When mortgage rates plunged to historic lows during the pandemic, home prices surged more than 40% nationwide in less than 3 years. In some cities like Boise and Austin, prices jumped more than 60%. It wasn't because materials got more expensive overnight. It was because borrowing became cheaper, and the market responded the only way it knows how: by raising prices until affordability returned to its breaking point. The 50-year mortgage follows the same logic. The monthly payment shrinks, and the price of the home inflates to fill that gap.
Thanks for watching. If you found this helpful, please like, comment, and share to help others stay informed. And don't forget to visit EstateScope on YouTube for the full video and more real estate insights.